Okay, so far you understand generally accepted accounting principles, you can use the accounting equation, and you've prepared some basic financial statements. That's a lot of information for one chapter, especially the first chapter, and you aren't even finished yet. I want to talk about the financial statements a little because there are some basic things that you want to pull back and look at, and then realize it isn't that difficult. Let's look at the income statement first. What kinds of accounts are on there? There's revenue, fees earned, and expense. Okay, expenses. That's it. Revenue minus expenses is net income. Are revenues and expenses on the balance sheet? No. Just net income flows down to the statement of owner's equity right here. Right now, you are still just learning account names, so it seems more complicated than it is. So let's look at the statement of owner's equity next. Now, the best way to look at this statement is thinking of a simple formula. The beginning owner's equity plus any additional investment plus net income minus owner's withdrawals is the ending balance on owner's equity. Okay, and just think about those pieces and fill in those blanks, and that's the statement, and that brings you down to our new owner's equity number, which goes into the balance sheet. Now, the balance sheet can also be thought of simply. It includes assets, or what we own, okay, liabilities, or what we owe, and equity, what's left over. It exemplifies the accounting equation that where assets equal liabilities plus owner's equity. Now, for the balance sheet, you simply must know the names of the accounts, but notice some things. There are no revenue or expense accounts here. And if an account ends with the word receivable, it's an asset, it's coming in. If it ends with the word payable, it's a liability. And finally, the statement of cash flows. When you think of this statement, think of three main areas: operating, investing, and financing. Operating activities include cash flows from what the business does. They receive cash from customers and they make payments for expenses. That's the amount of cash we receive for operations. Investing activities are changes in long-term assets. Okay, and financing activities are changes in long-term liabilities and owner's equity. Okay, it's really as simple as that. Now, I hope this helped. If you can relate any of this to a business that you're familiar with or to an industry that you'd like to work in, that will help too. So now you have one more thing to learn, and chapter 1 is a wrap.